Hi, this is Pat Keown. I'm going to talk a bit about fund flows that we saw during Q4. Let's start with taking a look at the some of our macro groups and the fund flow activity we saw during the quarter. As you can see, overall, ETFs had positive net flows of 109 billion, while mutual funds took in just about 97 billion. As we break down into our macro groups, equities, let's take a look how they're broken out. ETFs, responsible for the lion's share of the positive net flows there, took in about 88 billion, while mutual funds actually saw some outflows, about 1.7 billion. Taking a look overall at equities, mutual funds had positive net flows for the year of about 92 billion, while ETFs took in about 155 billion. Okay, moving on to taxable fixed income funds. ETFs again responsible for the net inflows here were 19.5 billion for the quarter, while mutual funds saw outflows of 13.4 billion. Again, for the year, both have positive net flows. Mutual funds took in 58 billion, while ETFs took in about 38 billion. Moving on to muni debt funds. This time, mutual funds were responsible for the bulk of the inflows, had 7.8 billion in positive net flows, while ETFs took in 1.1 billion. For the year, mutual funds, were up. Had positive net flows of 23 billion, while ETFs had 2.7 billion. Lastly, money markets had a very strong quarter with about 105 billion in net inflows. Moving on, let's take a look at our equity fund flows, broken down into some other groups here. U.S. diversified equity funds had net outflows for the quarter of about 14 billion. This continues a trend we've seen over the last couple quarters. Third quarter, they had outflows of 24 billion. Second quarter, about 10 billion. And for the year, they have negative flows of roughly 24 billion. Sector equity funds had net inflows of 6 billion for the quarter. Again, they experienced positive net flows every quarter this year for a total net inflow of 27.6 billion. And lastly, our World Equity Fund Group, net inflows of 6.9 billion for the quarter. Again, positive net flows for this group every quarter this year, and they've taken in just over 87 billion for the year. Taking a look at a few select ETFs now. Starting off with the Spider S&P 500, a very strong fourth quarter for them. Net inflows of just over 27.7 billion, which puts the flows for the year at just over 23 billion. On the negative side, we see money leaving QQQ and EEM. Power shares had about 4.1 billion in outflows, while the iShares MSCI Emerging Markets had about 5.4 billion in outflows for the quarter. Let's take a closer look at our equity funds now. The biggest, broken down by classifications, the biggest gainers and losers on the quarter. Amongst the U.S. Diversified Equity Group, we see the S&P 500 index funds had 5 billion in net inflows. Multi-cap core took in 4.6 billion. Large cap growth 4.3 billion. Sector equity, healthcare 2.5, energy MLP 1.8, and real estate 0.9. In world equity, international multi-cap core 11.3, international large cap core 4.3, and international multi-cap value 2.0. Groups classifications that saw money flowing out. U.S. diversified equity, mid-cap growth led that group, had 5.4 billion in net outflows. Sector equity funds, global natural resources saw 1.6 billion leave their coffers. And amongst the world equity group, international large cap growth had 5.3 billion leave. Taking a closer look by classifications again, this is overall amongst all funds. The largest, the top 5 classification by fund flows for the quarter. We see that money markets dominated the quarter. Institutional money market took in almost 48. Institutional U.S. government just over 32, and institutional U.S. Treasury 13.4. The bottom 5 classifications by fund flows overall: core plus bond, 18.9 billion left. The lion's share of this will be tied to the PIMCO total return outflows in response to Bill Gross leaving the firm. And let's move on to our next slide, looking at taxable bond flow, ETFs, as that macro group on their own. Core bond funds led the way by a large margin, taking in over $30 billion for the quarter. The next closest group you see is the U.S. Mortgage Fund, which is less than $5 billion. And then if we turn our attention to the bottom of the slide, we see Core Plus Bond Fund that we spoke about on the previous slide, with the PIMCO total return outflows, followed by loan participation, which is roughly $12 billion in outflows. Well, that wraps up my piece. Tom, turn it back over to you.
Thanks, Pat. I appreciate it. Thank you. Nice job. Anybody have any questions, certainly let us know. We'll go over any questions that you might have. But I do want to, again, touch some housekeeping items that some of you guys might have missed that coming on a little bit later. We will be sending out a PDF version of this presentation to you. It should be out, I'm hoping, around noon or so, Mountain Standard Time, and hopefully a little bit sooner. And then obviously our replay will be out there as well. Our next WebEx presentation is actually tentatively scheduled for Wednesday, April 8th. We're trying to move it up a little bit in the process. So, normally we do Tuesdays to give people opportunity to get in the office and kind of, not be pressed on Mondays or do it on Fridays. But Wednesdays seem to be a good day for Jeff, myself, and Pat. And so we're going to go ahead and try to push that to April 8th, 2015. So mark that in your calendars. And as always, if you guys have any feedback for us, we'd love to hear it. We're also thinking of adding some other folks to this presentation as well. So keep your eyes out for some emails announcing that as well. I don't believe there's any questions, so I'd like to thank you guys for attending our WebEx presentation for the fourth quarter 2014, and look forward to seeing you for Q1. Thanks so much.